Seems like Toronto real estate market is in a bit of dilemma. It's sending all sorts of mixed signals. However, it looks like the stage is set for an improved market condition next year. You want to find out more? Continue on. Now, let's see how did the market do for the month of November 2024 and what is going to be the outlook for 2025. Let's look at the data for the Toronto real estate market for the month of November 2024. So Toronto Real Estate Board collects the sales activities and average prices for every month and releases them on the first week of the next month. So here we can see the month of November. As you see here, the average price has increased for about 1.1%. The number of sales has also increased and also the number of days on the market, which means it takes longer for the properties to sell. However, the number of sales has increased from year to date, which means this trend is actually going into the right direction as well as the prices. These are actually the direct results of Bank of Canada reducing the interest rates and improving affordability. Month of inventory has also dropped, and you see that it's about 3.8%. This is for the entire Toronto real estate market in all asset class, but each asset class will have its own number of month of inventory, which actually indicates whether it's in the seller's market, balanced market, or buyer's market. The Toronto real estate market shown 40% increase in the number of sales when compared to November last year. This shows that November last year might have been one of the worst months in the past history. Home sales increased month over month compared to October, which we just talked about on the previous slide. Average selling price has also increased comparing to last November. And the big news is that Bank of Canada dropped interest rate today, December 11th, for another half a basis point, which is now the overnight interest rate is down from 3.75 to 3.25%. This will affect the bank prime rates, which will be reduced from 5.95 down to 5.45%, which will affect the variable rate mortgages and also the line of credit. Typically, when the number of sales increases, this shows that the buyers are feeling more confident, coming back into the market and actually placing the offer on the house that they really want. Fixed mortgage rates may not go any lower than what they are today. They're hovering between 4.5% for a 5-year fixed. And variable rates, however, will be affected every time Bank of Canada drops the interest rates. New mortgage rules as of December 15th will come into effect, which I have a lot more to talk about. So that will allow buyers to actually be able to purchase a home with less than 20% down payment for the purchase price of up to $1.5 million. So if you're shopping for a home, an average buyer could now qualify for purchase price that is almost 12.5% higher than they could have before the first rate drop in June 2024, assuming similar down payment, income, and credit. So this actually improved the affordability in overall. However, each pocket and each asset class is different. So you need to look into those in much more greater detail. Here, there's some mortgage rates as of recording this video on December 11, 2024. So as you see for a 5-year variable, what the rates are kind of hovering around. So today, the Bank of Canada just dropped the interest rates for another half a basis point. So this will actually get updated in the next couple of days. However, fixed rate are still hovering around 4.5 to 4.2%. And they may not actually go anything lower than what they are. So that's why the variable rates will start to actually catch up at some point with fixed rates and actually might be a viable option if you are renewing your mortgage or if you're actually in the market for getting a new mortgage. So if you've been following me, you know this is by far my favorite chart. It shows the average sale price and how they have increased and decreased over time versus the interest rates. So here, the blue dot showing the interest rates. As you can see, this was the COVID period where the interest rates were at the lowest and the prices were climbing. And on the February 2022, they peaked. And as soon as Bank of Canada started to increase interest rates, and they increased it actually quite significantly in a very short period of time, you see how the prices has been affected and they kind of, fell off the cliff. But again, every change in the interest rates were actually shown here. There's also some, seasonal adjustments here. But as you see here, we are right now at around 3.25, which today Bank of Canada just dropped the interest rates to 3.25 and the prices are still hovering around the same average as they were back in, July. There was some, again, minor adjustment depending on the asset class that has been changing, and you can compare them, especially with the regions. So 416 is the Toronto area, and you see on the detached segment, there has been 681 sales, and the average price for detached home in Toronto is averaging between 16 and 95. You can also compare it here with the year-over-year change. So as you see, there's been almost 6% increase in average sale price for a detached home in Toronto. For semi-detached, there's been about 2.8% increase in price. However, townhouses and condos, there's been 6% drop for townhouse and 0.3% drop for condos. This is again comparing the average sale price for November 2024 comparing to November 2023. You can see the year-over-year summary in terms of the number of sales and new listings and active listings. Obviously, the active listing has increased dramatically for 30% since last November. Obviously, a lot of it are condos, probably one-bedroom condos that are investor bought, and now they're not cash flowing, so they want to offload those assets. That's why we see a lot of condo listings in the market. Majority of them are in the 50 range. There's a lot of opportunities to grab a good deal in that segment. However, the prices, as you can see here, average sale price has increased for 2.6%. Again, this is average price for all asset classes. So what will happen now? For the rest of 2024, we are in December. There's, pretty much 2 weeks left, and then people are getting to the holidays, and no one's really actually, actively buying real estate unless you're a savvy investor. So the expectation is that there will be a drop in the activities. This is seasonal, and pretty much we see it across the board every single year. However, on January, February, things will start to pick up, and for March and April, usually it's for the busiest time of the year. So likely with the new mortgage rules that are coming into effect as of December 15th, and the lower interest rates, the number of sales will increase and the activity will also increase, especially in that 1 million to 1.5 million low-rise freehold segment. Because that's the segment where you can still find a decent home in Toronto. And now with the new mortgage rules, you're not required to actually put 20% down. However, you still need to get qualified for that mortgage, and you need to be able to afford the monthly payments. But if you're interested, you can talk to a mortgage broker and find out what you can actually afford given these new mortgage rules. Should we buy now, or should we wait 2, 3, 4 years? Well, it depends. If you are going to hold your property for 5 years, there's a good chance that in the condo segment, you'll see a strong comeback in 27 or 28. However, don't expect anything meaningful in the next 12 months. Lower segment, however, will still remain strong because there is a lot of demand. And now with the new mortgage rules, I believe there will be a lot more activity and price increase because obviously there's more buyers, there's more interest, and there's not much in the market for that $1 million to $1.5 million mark. Therefore, you will see the prices will slightly start to creep up. So now let's see how does the new mortgage rules will actually affect you if you are in the market for making a purchase. For example, if your purchase price is $1 million, this will actually make you eligible for putting less than 20% down payment. So on December 14th, you would need minimum 20% down payment, which is $300,000 for one price, and your monthly mortgage payment will be in the neighborhood of $6,979 based on today's rates. However, as of December 15th, you are not required to put 20% down as minimum, so your minimum down payment will be $100. And based on today's rate, you will be in the $7,997 range, including the default insurance premium. So what is default insurance premium? So now that you're putting less than 20% down payment, your lender will require some sort of insurance that you'll be able to actually pay this mortgage. And in case of default, they will be able to get their money back. Canada Mortgage and Housing Program actually offers this insurance. So you need to actually pay the insurance on a monthly basis. However, your mortgage is now secured and insured through the CMHC, and then your lender actually feels comfortable that in case you default, they will get their money back. You have to pay that insurance monthly, so that increases a little bit your monthly payment, but because your mortgage is insured, the lender will be actually able to provide you with some lower rates. So in this case, it's roughly around 0.5% lower rate due to the insured mortgage. So now, when you have $125,000 as down payment, obviously your monthly mortgage rate payments have increased, but you'll still need to get qualified for this mortgage. But in case you have $300,000, you can now put $125,000 and actually invest the rest, in some other categories where you can actually generate some more income. I would actually recommend that you speak with your mortgage broker and consult with your accountant in order to get a better idea. But this is basically the simple math that how the new mortgage rules will actually affect. Moving over condos, unless you have a very unique property with nice views, hard loft, large outdoor space, you need to be absolutely priced in a way that you look much better than your competition. Remember, only 1 out of 5 condos are selling. So if you want to be that one unit that sells, you need to make sure your pricing is on point. Also, there will be 24,000 new units is expected to be completed in 2025. So there will be some time until all these units gets absorbed either on rental or resale. However, keep in mind that the new condo sales is at its lowest in the past 20 years. This means if the developers are not able to sell the condos today, there won't be anything that gets completed in the 4 or 5 years. So we are averaging between 30 to 25,000 new units for the past few years. So imagine if you take out that 24,000 units out of the market, what will happen to it? There will be a huge deficit in the 28, 29, and we'll see how that actually affects the condo market. But it is expected to see the condo market will remain kind of flat or even slight decrease for the next 12 months. But I'm interested to see what will happen once, there's a huge deficit in number of new condo finishes. So it's actually a very good long-term investment. If you're looking for investment, maybe, you should be looking in that segment. So here you can get an idea about the new construction and the new condo sales that I just talked about. 2024, there's been 32,000 new unit completions. As I mentioned, 2025, there will be 24,000. And as you see how it's dropping, and look what will happen in 2030. So these are the number of units that the construction hasn't been even started. The blue ones are the one that actually the construction has been started. So you can imagine what will happen here. So here's our summary here. The demand for low-rise single family is still strong, and this segment of the market is going to get even busier in February, March, as soon as the new mortgage rules comes to effect for that $1 million to $1.5 million range. Remember, it's time in the market, not timing. If you're planning to hold on to your property for minimum 5 years, then that's when you actually see the major return. You're not going to see a return if you want to trade real estate every year. There's going to be a lot more cost for transaction, and most likely you're not going to see a decent return on your investment. The market will remain flat, and there might be some even slight price decrease. However, investor demand is still to the bottom. So if you're an investor and looking into the condo segment, there are a lot of options out there which you can actually grab a good deal and be able to take advantage of the low price and the low entry levels now. And that will actually, help you for over time in order to gain more appreciation. And of course, over time, you'll be able to take advantage of your investment. Variable rates will actually start to catch up with fixed rates at some point in 2025. So if you're in the market for new mortgage or trying to renew, maybe you want to look into the variable rates as well. However, talk to your mortgage broker and see what the best option is for you. And if you're in the market for purchasing a new home or your next home or an investment property in the next 6 to 12 months, make sure you have your financing pre-approval in hand, because as soon as you see something that catches your eyes, you'll be able to actually act on it and be able to get in that market and secure a decent price for that asset class that you're looking for. Thank you for watching. My name is Parsha and I'm the local real estate advisor here in the city of Toronto. If you have any questions or you want to have a chat about your next real estate journey, you can use the link down below in the description and book a call with me, and we'll be more than happy to